Thank you, Sam. Good afternoon, everyone, and thanks for joining us. We're going to, this afternoon, talk about compliance and commercial lending, which includes small business lending, of course. And, how to make this work. We'll get into some of the regulations. I can't possibly teach the ins and outs of all of these regulations in the allotted 2 hours, but I do have the high points, the ones that most often create issues for commercial lending. I've touched on those. We'll be discussing some of those in detail. And we're also going to be talking about how the best ways to manage this process in commercial lending so that the bank can actually get its arms around this and have some controls in place so it's not spending its time chasing these issues and redoing work, which is always one of my pet peeves when I'm trying to work to help a bank get its processes in place. I moved the slide to where it's about my background. I did start out in banking in commercial lending, so I have done this, so I know how commercial lending works. I ended up moving over to credit policy and compliance when lending management found out I could read a regulation and make sense of it. And so commercial lending was like, Yahoo, we have somebody that can, help us figure this out and write our policies and procedures and help us stay in line. And that was at a bank that was very control-oriented, and they didn't want to have issues, so we were very conscious of how we structured things. And I, to this day, still utilize a lot of those practices. Their viewpoint was they didn't want to have issues on regulatory issues so that when they did need a break from examiners, they had a better chance of getting a break because we worked really hard to stay in compliance. It truly was a goal. And even when we merged with a much larger bank, that was still the goal of that bank. So anyway, I did spend a lot of years doing credit review, credit policy, a couple of years of workout loans, risk management, the whole gamut. Also spent time in residential mortgage, private banking, residential mortgage, and just private banking in general, doing consumer loans as well. So I've kind of, in all the years I've been doing this, plus the years I've been consulting, sort of, seen it all and been involved in it all, which is helpful when you're trying to relate to processes. The first thing we want to talk about is why this matters. And any of you who see some of my posts on Bankers Online know that I frequently will say, don't just slap a consumer label on something and issue disclosures just because you don't have to then stop and figure out is it commercial, because you're losing things when you do that. If it is truly consumer, you want to do it, but if it's not a consumer loan, you're giving up rights that would protect the bank. The bank has more protections in a commercial transaction, and we'll talk about some of those as we go through this. And I don't, you want to look at the risk the way it should be looked at. If it is consumer, do it that way. Give the proper disclosures. If it's not, then use the tools that are there that you can have in the commercial documents that will help the bank, especially if you get into a problem loan situation. So I don't like to give things up if I don't have to. The incorrect application of consumer regulations can also, you're telling a customer they have rights that they may not truly have, and that can get into some lengthy conversations. Some reasons moving on to slide 4, some reasons for why you want to have processes around this. And this was something that, like I was saying, the banks where I started out a long time ago in banking, was we wanted to have processes. We wanted to control our risk. And when you issue something and say, here's what you have to do, and then say to the individual lenders, now you do this, they each then have to develop their own process for doing it, because you have not, you being the bank, has not created a process for them to operate within. They each have to come up with their own procedure. Those procedures may be vastly different. Some of those procedures may be, I'm going to ignore it. So you don't want to do that. You want to get, if it's at all possible, you want to have some procedures that you're told, here's what you do. Here's the form. Here's where you send it. Here's an online form. Here's what you do with it. Here's how you request it. Have it centralized. All they do is tell someone, I'm doing a real estate loan, and that person knows, okay, I've got to start looking for these different things. The other thing, and this was my second bullet point on slide 4, the banks I started out in, one of the main focuses was they did not want commercial lending officers and small business lending officers tied up with administrative paperwork. They wanted to get it centralized, have some staff where these things were taken care of, and those lenders were back out bringing in new business. They wanted them focused on business development because that was where we made our money. That was how we were paying everybody. And those lenders are some of your highest paid people in the bank. You don't want to have them sitting there, doing certain calculations, filling out forms, that type of thing. So keep that in mind, and I think that's an important point to realize. If you're going to tie up your highly paid people on administrative tasks, well, that can be an expensive process. The other thing is, by having standard processes, you're not going to be constantly having to go back and redo and correct mistakes, and this can be an efficiency effort for the bank and save time and money. It really contributes to the bottom line. Every time you have to go back and scrub something and redo, or let alone pay fines on flood or something like that, that's expensive for the bank. So if you set up a process that's going to streamline it, it's an efficiency measure as well as a risk management measure that keeps everything going in the same direction. Moving on to slide 5. Let me get my notes here. These are some of the things that can be potential problems. If there are no ground rules for differentiating between business purpose and consumer, how to do the different processes, I have reviewed things at banks where I found because they failed to commercial had an application that really should have been handled over in consumer, and they made no disclosures whatsoever. And by reading the file, it was obvious this was a consumer purpose loan. And I've actually come across a few where it really was a residential mortgage. There was no way this was an investment property. And it was done in commercial, and it was done on commercial documents, no disclosures. And besides that, it would have commercial clauses in there. It would have waiver of jury trial, confession of judgment, because they were commercial documents. So this can really be a problem. If you don't have a good process, as you all know, you can really mess up on flood. And with flood, even we'll talk about that towards the end, even when you fix it, that original error still stands if it's post-close. You don't get rid of the error. You still fix it for going forward. You fix your risk. But that error is still counted, and that goes as part of the fine. The other thing is we'll talk about this too, rental real estate documented as consumer. If you're doing them for sale in the secondary market under those Fannie and Freddie programs where it's like up to 10 properties, but they have to have a lot of liquidity, that kind of thing, that's okay. But if you're not and you're portfolioing these loans, that might be a new word I just made up, portfolioing these loans, that can be a safety and soundness issue. If you're going to book that as a consumer loan and it's going to sit in a portfolio and never be reviewed again, and yet you're reliant on that property being leased continually and it's not going to get annual reviews, any periodic reviews, this can be an issue. Some of the OTS banks ran into this with the OCC when they were converted over to their new regulator. They had certain loans booked as in their mortgage portfolio. And the OCC said, oh, wait a minute, this is a commercial loan. You've got to start treating these as commercial deals with annual visits, follow-up on leases, and that type of thing. So you need to pay attention to this type of thing. It can affect your call report. It can affect credit concentrations, everything like I said on this slide here. We'll move on to slide 6. There's some approaches that you can take for this. You have to have some people with expertise, and I'll mention this throughout. And maybe it's going to have to be the compliance officer. That can depend on your bank and how many people you have, but it's really nice if there can be some, even if it has to be the senior lender or someone in the credit department, if you have a credit administration area with analysts, or a senior administrative person, something like that, or even someone in loan operations who's very good with this kind of detail and can develop expertise, maybe not be the same person on every single regulation, but some of these regulations get really tricky, and you really need to develop expertise for some of these. You need to know which regulations apply to commercial, and we'll talk about that today, and how they apply differently. Sometimes there's little nuances. Sometimes there's not. Reg B, of course, we know has the nuances for commercial versus consumer purpose. the second bullet point here, you really